The US dollar posted its biggest weekly decline in more than a decade on Friday, as trillions of dollars worth of stimulus efforts by governments and central banks helped to temper a rout in global markets driven by the coronavirus pandemic. Pledges of big government spending and coordinated efforts by central banks around the world to increase the supply of dollars have supported a rally in other major currencies. The US dollar edged down by 0.9% against a basket of currencies on Friday to enter to 98.36. For the week, the dollar index fell by 3.9%, its biggest weekly decline since March 2009, after posting its biggest weekly gain since the financial crisis in the week prior. The US Department of Labor reported a record-breaking rise in initial jobless claims. The figure rose to an all-time record of 3.283 million. Although this report comes as a little surprise to the COVID-19 driven markets, it will be referenced as an indicator of forthcoming economic damage. Meanwhile, the United States House of Representatives approached a $2 trillion aid package on Friday, the largest in the U.S. history, to help people and businesses cope with the economic downturn triggered by the pandemic. The euro gained 1% against the greenback to finish at 1.11 on Friday. For the week, the common currency advanced by 4.1%. Speculators increased their net short dollar position last week to $8.88 billion from $8.27 billion the week before, according to Reuters calculations and U.S. Commodity Futures Trading Commission data. In the meantime, sterling jumped by 2.09% against the dollar to finish at 1.2457 on Friday. For the week, the cable rose by a solid 7%. The big question for markets now is whether the huge stimulus introduced so far across the globe will be enough to help the global economy withstand the economic shock from the COVID-19 containment measures. Elsewhere, in the crypto market, Bitcoin price edged down by 5.6% on Friday to enter at $6,370. For the week, it still gained 9.3%. Prominent crypto analysts pointed to the perfect storm for Bitcoin, suggesting that it is now make or break time. However, the short-term prediction for the leading cryptocurrency is still quite bearish, as financial markets continue to crash amid the global pandemic. Meanwhile, oil prices kept plummeting, posting a fifth straight weekly lows as demand destruction caused by the coronavirus outwent stimulus efforts by policymakers around the world. International benchmark Brent crude futures fell by 5.35% on Friday to settle at $24.93 a barrel. For the week, it posted a 7.6% decline. Meantime, US crude futures WTI dropped by 4.8% on Friday to settle at $21.51 a barrel, with a 4.1% fall week on week. Both contracts are down nearly two-thirds this year, and the coronavirus-related slump in economic activity and fuel demand has forced massive restriction in investment by oil and other energy companies. With 3 billion people is locked down, global oil demand could be cut by a fifth, International Energy Agency said, calling on major producers such as Saudi Arabia to help to stabilize oil markets. Meanwhile, gold edged lower as investors opt for cash amid deepening virus fears. Gold futures fell by 1.5% on Friday to settle at $1,625. However, for the past week, gold still gained 9.4%. You were watching weekly review of the currency and commodity markets on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.